This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China has banned exports to the United States of items related to the minerals gallium, germanium and antimony that have potential military applications, it said on Tuesday, a day after Washington's latest crackdown on China's chip sector. A Commerce Ministry directive on dual-use items with both military and civilian applications cited national security concerns. The order, which takes immediate effect, also requires stricter review of end usage for graphite items shipped to the U.S. In principle, the export of gallium, germanium, antimony, and superhard materials to the United States shall not be permitted, the Commerce Ministry said.
China's crude oil imports are on track to peak as soon as next year as transport fuel demand begins to decline for the world's top crude buyer, ending the country's decades-long run as the dominant driver of expanding oil consumption. The speed of its transition to electric mobility has stunned oil producers and investors. No single market is positioned to replace Chinese demand, which has made up 41% of annual global oil consumption growth, averaging 1.1 million barrels per day, BPD, over the past 3 decades, according to the Statistical Review of World Energy. EV hybrid sales in China topped combustion engine vehicle sales for the first time in July, eating into China's need to import crude for refiners to make gasoline, with prolonged economic weakness also slowing overall oil consumption.
Moving on to the top news in the energy sector.
Asia's imports of Russian crude oil and liquefied natural gas are set to log small declines this year, and while coal had a bigger drop, there's little evidence that Western sanctions are working well. Russia has come to rely on Asia, the world's biggest buyer of energy commodities, to soak up cargoes that are no longer able to be sold to buyers in Europe and elsewhere as a result of sanctions placed against Moscow in the wake of the February 2022 invasion of Ukraine. China and India emerged as major purchasers of Russian crude, coal and LNG after the invasion, taking cargoes because of the discounts on offer.
Standing on the rooftop of a 16-story residential apartment building in Ukraine's capital Kyiv, Valery Pindyk pointed to several rows of solar panels. Pindyk hopes the installation, one of the first of its kind by residents in Kyiv, will help about 1,000 families living in the building get through what could prove Ukraine's most difficult winter since the start of Russia's invasion. The idea was born when we had electricity cut-offs in summer. We, the Housing Association Board, realized that if we had blackouts in summer, then in winter they will not be shorter but longer, said Pindyk, 49, who heads the association. Next, we have the top news in metal markets. Gold prices edged higher on Tuesday, as recovering expectations of a U.S. rate cut in December weighed on the dollar and Treasury yields ahead of economic data that could offer further signals on the Federal Reserve's policy trajectory. Spot gold rose 0.1% to $2,640.16 per ounce by 12:42 GMT, after falling as much as 1% on Monday. U.S. gold futures gained 0.2% to $2,662.80. Markets are pricing in a 73% probability of a 25 basis point rate cut at the December 17-18 meeting, up from 66% before Fed Governor Christopher Waller on Monday signaled support for a cut this month, citing inflation still forecast to fall to 2%.
Dalian iron ore futures prices advanced for a third straight session on Tuesday to the highest in nearly 2 months amid expectations of more economic stimulus and seasonal restocking from steelmakers in top consumer China. The most traded January iron ore contract on China's Dalian commodity exchange ended daytime trade 1.5% higher at 813 yuan and 50 fen, $111.66, a metric ton, its highest level since October 8. The benchmark January iron ore on the Singapore exchange climbed 0.56% to the highest level since November 8 at $105.20 a ton, as of 0700 GMT.
We will now look at the top news in the agricultural sector.
India is likely to see above-average temperatures during the winter season, the state-run weather office said on Monday, raising concerns about the yields of crops such as wheat and rapeseed. India is expected to experience above normal minimum and maximum temperatures from December to February, with fewer cold wave days expected, the India Meteorological Department said in a statement. Winter-sown crops such as wheat, rapeseed, and chickpea are planted from October to December and need cold weather during their growth and maturity stages for optimal yields.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.